Don't trade the Asia session. That's what some currency trading mentors will tell you, but they are dead wrong. I've been trading for over 20 years, and Asia has always been my most profitable session for both swing trades and day trades. The New York session is all about setting direction, but the Asia session gives you the opportunity to ride that move. That's how I trade every single day. In today's video, I will share with you my top 5 Asia trading session secrets. But before we get into trading tips, I want to tell you a little bit about my family because many of you write to me in Vietnamese. And I'm so sorry I don't understand it because my parents are from Vietnam, but we're Chinese. If you've been to Vietnam, you'll know there's an amazing Chinese community in Ho Chi Minh City. During the Vietnam War, my entire family fled Vietnam and settled all around the world. Hong Kong, Singapore, US, Canada, but I travel to Asia often. And ever since I was very little. When I am in Asia, particularly Singapore, that's when I truly appreciate trading the Asia session. Now, you may know that I trade twice a day, the late Asia Open and the early New York Open, which in New York time is 8 p.m. and 6:30 a.m. During the Asia session, I day trade and I also set up my swing trades for carry overnight. But when I'm in Asia, I never have to wake up early because that's 8 a.m. and 6:30 p.m. But you don't really have to live in Asia to reap the benefits of trading the Asia session. Even if you live in Europe and you're an early bird and get up near the London Open, there's still plenty of opportunity, particularly on those swing trades. Our BK members will agree that our best zip setups and trades are our Asia trades. And the key to trading the Asia session profitably is to know how to trade it right. So let's dive into it. Tip number 1, knowing when not to trade is just as important as knowing when to trade. I talk about this often because it is an extremely important concept for traders to understand that not losing money is just as valuable to your P&L, to your pocketbook, as making money. Those trading mentors who warned you against trading the Asia session, there is some merit to that. They are right that if you trade the early Asia Open, like 5 p.m. to 8 p.m. New York time, which is equivalent to 22 to 1 GMT in the summer, this is the dead of Asia, before most traders get to their desks. And the worst time within this period to trade is between 5 p.m. and 7 p.m. New York time, or 22 to 24 GMT. Spreads are usually wider, nothing happens, and you're stuck sitting there second guessing whether you should be in your position at all because nothing's happening. Tip number 2, the best time to initiate trades in the Asia session is actually between 8 p.m. and 9 p.m. New York time, especially if there's a big move in the New York session, because there's a very good chance that there will be continuation. You can see an example of that on this dollar-yen chart. It's FOMC day, which means the day the Federal Reserve makes its central bank rate decision and announcement. Dollar-yen sells off after the central bank rate decision, and at the Asia Open, it is still trading in my sell zone according to my zip charts. Dollar-yen is trading below the indicator line, and the background, which reflects the longer-term trend, is red or bearish. And if you sold at the Asia Open, you would have captured as much as 100 pips and got 100 pips of continuation in just 2 hours. Riding US session flows is a strategy that I use every single day. And it's a principle that you can apply regardless of whether you're using zip or not. That, if you've got a big move in the New York session, there's a good chance there'll be continuation in Asia. Tip number 3. During the Asia session, the best opportunities are actually in the crosses, particularly the Australian dollar, New Zealand dollar, and Canadian dollar crosses. Forex, my trading partner, will tell you that I make the most money trading Euro Aussie, Euro Kiwi, Euro CAD. But I also trade Aussie Swiss, Kiwi CAD, Aussie CAD very well. And the reason for that is usually there's a lot of movement in the Aussie and Kiwi, less movement in the other currencies. The trick to trading these crosses during the Asia session, and oftentimes carrying them into the New York Open, is to be able to pick the right trades. Take a look at this Euro Kiwi chart. It formed a zip buy signal at the Asia Open that turned into a big move. Here, we have an Aussie Swiss chart, which was in the zip sell zone during the Asia Open. And you can see both cases, there's very nice continuation. Even if you weren't trading zip, you could see an Aussie Swiss that was trending lower in all of the candles prior. And then shortly after the Asia Open, it breaks down for a nearly 50-point move. Tip number 4. Asia is a great time to lay on swing trades. Usually, swing trades involve keying off the candle close and oftentimes the close of the daily candle. I have a very simple strategy that picks tops and bottoms using Bollinger Bands. I'll be doing a video on this soon, so don't forget to subscribe to my channel and hit the notification button for updates. The Bollinger Band strategy involves waiting for the instrument, it could be a currency, it could be index, it could be stock, to prove that it is forming a top or bottom before taking the trade. This is really the key to trading tops or bottom, which is waiting to make sure that it's starting to form the top or bottom before jumping in. Now take a look at this daily chart of the euro dollar. When euro dollar closes above the first standard deviation Bollinger Band, after having been below it for some time, like you see on the right-hand side of the chart, that's a buy signal. And when it closes below the first standard deviation Bollinger Band, after having been above it for some time, like you see in the right-hand side example, that's a sell signal. Both trades key off the daily close, which happens in Asia, and became generous swing trades. You also had plenty of time in both cases to get into the trade. You didn't necessarily need to trade right at 5 p.m. New York time, for example. Tip number 5. For day traders, it is much better to fade than to follow the initial reaction to Australian or New Zealand data releases. Take a look at this 15-minute Australian dollar US dollar chart. We don't even need to know what the number came out at to understand that it was a very good and strong jobs report, because Aussie dollar soared, it spiked sharply higher within a matter of minutes. And you can see this spike took Aussie dollar up to 68.30. And you may think, I should buy it because it's a really good jobs number. We had a very strong reaction and there should be continuation. But guess what happened? There was continuation, but only by 5 pips before it reversed and dropped back 30 pips. If you were day trading a jobs report, it would have been much smarter to fade the rally than to join it. And the reason is because there are fewer people trading during the Asia session than in Europe or New York, for example. So more often than not, the post-news moves after the data release ends up peaking and being the peak of that currency pair's move. Another way to look at this is that you can save yourself some money and by not being fooled into joining the post-data spike moves, because they can be very tempting. Trading profitably means knowing what to trade, when to trade, and how to trade it. Asia is the best trading session for many people, including Americans who are getting off work and, even Asians who are just waking up. The reason why our Asia session trades are so successful is because our strategies come from years of experience in understanding the dynamics of the Asia trading session. If you like this video, let me know in the comments below. Also, if you want to learn how to trade during the Asia session or how my zip indicator works, check out the links in the description. See you next time.